All right, what's going on, everybody? Welcome back to the MIE Trading Podcast, the podcast where I share my knowledge and experience on trading psychology, risk management, and strategy optimization so that you can become a better trader. Today, I'm going to be talking about trading psychology, and what I'm going to be sharing is the most important trading psychology tip that you could ever need. So, trading psychology is probably the most neglected aspect of trading performance. Everyone loves to go very deep on strategy optimization and maximizing profits and avoiding losers and this and that. And then followed that, they focus a little bit on risk management and completely neglect trading psychology. Yet I believe that trading psychology is the most foundational aspect of our performance. It's the bedrock upon which all of our success as a trader stems from. And without the appropriate beliefs, principles, decision-making processes, and control over our emotions that we get from mastering our trading psychology, nothing else you do as a trader matters. Your risk management strategies don't matter, and your trading strategies don't matter because you don't have that foundation you've built from mastering your trading psychology. And that's why this is the most important tip, because if you haven't done this, then you're never going to be successful regardless of what you do. And in this video, I'm going to be sharing the most fundamental tip, as I said. And now some of you might be watching this thinking, oh, fucking trading psychology, this is a bunch of wishy-washy bullshit that doesn't matter. Let's skip. Now, if you think that, I can assure you of two things. Number one, it's not. And number two, if you think that, then you're probably never going to be successful as a trader because you're too caught up in your own ego to look for things that might suggest you're wrong. All you're going to be looking for, you have a massive confirmation bias. All you're looking for is things that say you're right, you're right, you're right. And when you do that in the markets, what's going to happen? You'll be wrong, you'll be wrong, you'll be wrong. So hopefully those that are left, you guys are actually the ones that have what it takes to be successful as a trader. And my goal with this podcast is to help you become a better trader. And I do that with bi-weekly tips on how you can improve your performance. So if you want to support me on my little journey, please remember to hit the subscribe button. It's free and it lets me know that I'm actually doing a good job of helping you. So with all of that out of the way, let's get to the meat and potatoes of the video. And that is, what's this tip that you're saying is the most foundational thing ever? And what it is that you need to believe the markets are fair, and you need to believe that you can make money as a day trader in the markets. Now, I suspect what you might think is, yeah, I know I can make money from the markets. Everyone knows you can make money from the markets. Yeah, the markets are fair, whatever, but it's not enough. You can't just say, yeah, I can make money in a market, because everyone can make money in a market sort of theoretically, right? Just place buy when it's low and sell when it's high. I'm not talking about theoretically, can you make money in the market? I'm talking about, do you believe that you can make money in the market? Deep down, do you believe that the markets are fair? And sometimes it's not as obvious as we might think it is on the surface. It's very easy to say, of course the markets are fair. Of course I can make money as a trader. But do you really believe it? Because if you face loss after loss after loss, and you put in hours and hours and hours of work, you place the perfect trade and it goes against you, does that seem fair? Fuck no. You're like, oh my God, I just put in all this effort, all this work. I did all this study. I looked at correlations. I looked at fundamental analysis. I looked at technical analysis. I looked at the S&P 500 and Tesla, and I looked at the inflation rate, and I looked at the unemployment rate, and I still failed. That doesn't seem fair. And it seems like the market's against you. How can you make money in the market when you do all that research and it's all for nothing because you lose anyway? When I give that example, you can see how easy it is to actually fall into camp, market is unfair. Camp, market is against me and I can't win as a trader. It's very easy with a string of losses. So what you need to do, you need to disconnect your results from your beliefs. And it's not that easy to do, because it's not about what you say externally. As I said, it's about your internal dialogue. It's about your subconscious. And that's why it's so hard to dig deep and actually find out your true beliefs about the market. You actually need to set aside time and think about it. And for a lot of people these days, they don't have the ability to think. So, and that's something that's really important as a trader. You've got to be able to think, to be able to place a trade in a rational way so that the variables are in your favor, so that your risk reward is in your favor, the win rate's in your favor, your expectancy is in your favor. These are the things that matter, and well, they matter as long as you've mastered trading psychology, which is the point of this video. Now, why is it so important that we master our trading psychology and that we have these fundamental beliefs of fairness and our ability to make money in the market? It's important because us humans, we like to prove ourselves right. We have a ton of beliefs about the world, and we're constantly on a mission to prove ourselves right. Now, let me give you an example. When it comes to drinking alcohol, Generally, people are going to say, I have a very strong alcohol tolerance. Or they're going to say, I don't really have a very strong alcohol tolerance. So there's two kinds of people there. Now, the people that have or believe they have a strong tolerance for alcohol, what are they going to do? They're going to drink more, they're going to drink faster, and they're going to be looking for the things that prove they are not intoxicated. So they might have 3 beers, 4 beers, they stand up.
Look, I can walk straight. I can still do 5 + 5 in my head.
It means I can have another beer because I'm not intoxicated. Now, the other person that believes they don't have the strong alcohol tolerance, and this is me, I don't believe I have a very strong tolerance. They're going to have 1 drink or 2 drinks, and they're going to be like, oh, I'm feeling a little bit dizzy. Maybe I shouldn't have another drink. And that's what I do. Am I actually intoxicated? Probably not. But I'm looking for every little thing that proves me right that I don't tolerate alcohol well. And the other people are opposite. They're looking for everything that proves them right that they do tolerate alcohol well. And what's the result of this? The people that believe they have the high tolerance drink more alcohol. And the people that believe they have lower tolerance drink less alcohol. And what does this look like in the market? If you believe the markets are unfair and they go against you and you can't make money, you're going to act in a way that proves you right. You're not going to do it consciously. You're not going to say, I'm going to try and make this trade lose to prove myself right. As I said, this is all in your subconscious. You're going to be doing all your work. You're going to be looking at the correlations, the technical analysis, the blah, blah, blah. And you're going to place the trade and you're going to be thinking, fuck yeah, this is a good trade. This is going to go in my favor. And then it doesn't, because your subconscious set yourself up to fail to prove your belief right. Now, if you are someone who has the belief that the market is fair and you can make money, now all of that research you do, all of the correlations, the technical analysis, the fundamental analysis, you plan the trade, you trade, the variables are in your favor because you're looking to prove yourself right that the market is fair and that you can make money in the market. And it's all due to your subconscious beliefs. Your subconscious knows a lot about how the market moves. Every single time you're looking at a chart, all of that information is going into your subconscious. It knows more than you ever could about how the market moves. And because it's your subconscious, you can't extract that. But it knows more than likely what might happen next. So it's going to sway your thinking to prove yourself right, regardless of which way you believe. And this is why it's so important to have complete and total control of your trading psychology. Because if you don't, your trading psychology is going to control you. And that's going to lead to bad outcomes. It's going to lead to failed trades. It's going to lead to lost money. And that's going to lead to pain. And then that's going to lead to reinforced negative beliefs about the market. That's going to lead to lost trades, lost money, and pain. And that's going to reinforce your beliefs about the market. And that's going to lead to lost money, you get the idea. It's a cycle, and it's going to be an infinite cycle until you finally realize, okay, something's wrong about the way I'm trading. I'm trying different strategies. I'm trying different risk management principles. Nothing fucking works until you tackle your trading psychology. So how do you fix this? There's 4 steps, quite simple steps, although much harder to do in reality to fix this. So the first one is you need to firstly realize that your beliefs about the market make a difference. You have to believe in trading psychology. You have to believe that the way you think about the market is going to influence the results you get from the market. Once you have that, you can move on to step 2. And that is you need to look deeply and identify your beliefs that you have about the market. Write down everything you believe about the market. If you believe that hedge funds stop, hunt, and always take you out, write that down. Now, I'm not saying whether they do or don't, but that's a belief you have, write it down. If you believe that the markets are fair or unfair, write that down. If you believe that you can be successful, write it down. If you believe that red candles mean this and green candles mean that, write it down. Write down every single belief that you have. Once you do that, you can move on to step 3. And that is identify which beliefs are not productive in the market. What might they be? If I believe the market is unfair, that's unproductive. If I believe that the market likes to go against me, that's unproductive. If I don't believe that I can make money in the market, that's unproductive. If you believe that if you're in a long trade and a red candle means that you're losing profit and you better get out or move your take profit or stop loss, that might be unproductive. And what you need to do then is find evidence that proves these beliefs wrong, because it's not enough to just know that your beliefs are wrong. That doesn't change your beliefs. You need to find evidence to get rid of these beliefs. So look at these beliefs that you have identified as unproductive, and then look at the market and find evidence that proves them wrong. If you find enough evidence, all of a sudden these are not going to be your beliefs anymore. Then you can move on to step 4. Now that you no longer have these negative beliefs, replace them with positive beliefs. cross them out in your list, replace them with the appropriate belief that needs to take its place. And then what you need to do is look for the things that confirms that new appropriate belief. So if you've swapped the market is unfair with the market is the fairest thing that can be, now you got to look for examples that prove that the market is the fairest thing that can be. It's a little bit of work, especially to do it for all of your beliefs. But this is going to be the thing that solidifies that foundation for so that your risk management actually makes a difference, so that your trading strategy actually makes a difference, so that the way that you manage your trades makes a difference. You need to get that foundation first. And you do that by doing these 4 steps, making sure that all of your beliefs are productive and that you have proof that all of your beliefs are productive in the market. And once you do that, you're now actually set up to make money from the market. You're now set up to have proper risk management. You're now set up to have good risk reward ratios, good win rate, good expectancy, and good money in your bank account, which is what we want as a trader. So hopefully this was a very detailed and thorough look at your beliefs regarding your trading psychology. And hopefully this helps you to get rid of some of your negative beliefs and replace them with productive beliefs that help you as a trader. If you found this video insightful or helpful, please leave a like, maybe click the subscribe button if you want to see more tips like this, and maybe share it with a friend that you think will find it valuable as well. As always, you can find my professional services at mie.trade. And other than that, thank you very much for watching the video, and I'll see you again later in the week. Bye-bye.